Hello friends, welcome to my new video. Today we are going to solve January 2018 question number 11. Let us read the question first. Selena Gomez owns a wholesale electric supplies business. She buys and sells mainly on credit terms. Option A, complete the following table to show the book of original entry in which each transaction would be entered. Transactions are sold goods on credit, sold goods for cash, purchased a fixed asset on credit, returned goods to a credit supplier, paid a credit supplier by bank transfer. On the 1st September 2017, her purchases ledger contained the following credit balances. A. Elder £1,266, B. Brown £3,478, N. Carter £2,188, D. Davis £1,068. At the end of September 2017, she extracted the following information from her records. Purchases on credit £21,786, payments to credit suppliers £15,422, returns to credit suppliers £1,731, interest charged by credit suppliers £184, sales ledger balance set of £650. Option B, prepare the purchases ledger control account for the month of September 2017. Balance the account on 30 September 2017 and bring the balance down to 1st October 2017. Option C, explain one error that would not be identified by preparing a purchases ledger control account. We have read the question, let us start answering it. In option A, it was asked to complete the following table which will show the book of original entry in which each transaction would be entered. First of all, we need to understand what is books of original entry. Books of original entry refers to the accounting journals in which business transactions are initially recorded. The information in these books is then summarized and posted into a general ledger, from which financial statements are produced. The transactions and the books of original entries are shown here. The first one is sold goods on credit. It will be recorded in sales book. The next one is sold goods for cash. It will be recorded in cash book. Then purchased a fixed asset on credit. It will be recorded in journal. Returned goods to a credit supplier. It will be in purchase returns book. And the last one is paid a credit supplier by bank transfer. It will be recorded in cash book. Clear? Next. On the 1st September 2017, her purchases ledger contained the following credit balances. All individual creditors of Selena Gomez have these opening credit balances in their T account. A. Elder have £1,266, B. Brown have £3,478, N. Carter have £2,188, D. Davis have £1,068. At the end of September 2017, she extracted the following information from her records. At the end of September 2017, she extracted these informations from her records. What were the information? Purchases on credit. She purchases goods on credit amounting to 1,786. Then payments to credit suppliers. She paid credit suppliers amounting 1,5422. Then returns to credit suppliers means she returned some goods to her credit suppliers amounting 1,731 pounds. Interest charged by credit suppliers. Her credit suppliers charge her interest amounting 184 pounds. And the last one is sales ledger balance set off. In this question, it was asked to prepare the purchases ledger control account for the month of September 2017, balance the account on 30th September 2017 and bring the balance down to 1st October 2017. First of all, we need to understand what is purchases ledger control account. In purchases ledger control account, all of the individual transactions posted to your supplier ledger are included in this account. It is similar to a credit account. The only difference is creditor account is an individual creditor account and purchase ledger control account includes all creditors account. Clear? So as we know, purchases ledger control account and an individual creditor account is similar to each other. So we will prepare this account as an individual creditor account. Okay. What was the opening balance? The opening balance of all creditors are given here. 1266 plus 3478 plus 2188 plus 1068. If you add this up, you will get 8,000 pounds. So this is the opening balance of a creditor account or a purchases ledger control account. And the opening balance is always shown on the credit side. As we all know, the opening balance of a creditor account is always shown on the credit side. Then comes purchases on credit, 21,786 pounds. The journal of this transaction will be purchases account debit and creditor account or purchases ledger control account credit. So 21,786 pounds on the credit side. Then comes payments to credit suppliers, 15422. The journal will be cash book credit and creditors account or purchase ledger control account debit. Purchase ledger control account debit. Then comes returns to credit suppliers 1731 pounds. The journal will be creditors account or purchases ledger control account debit and purchases return books credit. Purchase ledger control account debit 1731. Then interest charged by credit suppliers. This interest was charged by Selena Gomez's suppliers because she paid her suppliers lately. That's why they charge an interest on Selena Gomez. So it will be an expenditure for Selena Gomez, and the journal for this transaction will be interest expense debit and creditor account or purchases ledger control account credit. Purchases ledger control account credit 184. Then comes sales ledger balance set off 650. Balance set off took place only between a person who is a supplier and a customer. Say for example, X is an individual and Selena Gomez purchased 100,000 pounds goods from X, and after a few days she sold goods for 50,000 pounds to X. So can you answer me how much Selena Gomez owe to X? The answer is 50,000 pounds. So now if Selena Gomez pay 50,000 pounds to X, all the transaction will be settled. So the journal will be cash book credit and creditors debit 50,000 pounds, and the set off journal will be creditors debit and receivables credit 50,000 each. 50,000 has been paid by Selena Gomez and the other 50,000 was set off by her sales, which X owe to Selena Gomez. Clear? I hope you have understood what is a balance set of transaction. So for this question, the balance set of figure is 650. So the journal will be creditors debit and receivables credit. And in this question, purchases ledger control account is similar to a creditor account. So here, purchases ledger control account debit and sales ledger control account will be credit. Now we will have to balance it. On the credit side, if you add these three figures, you will get 29970. And if you deduct 15422, 1731 and 650 out of 29970, you will get 12167. So this is the closing balance for the September month and the opening balance for October month. And there is one more thing. If you have noticed that I have not given any date here, because if you look carefully in the question, except 1st September 2017, 30th September 2017 and 1st October 2017. There is no other dates available. That's why I did not give any date in the answer. But you must give the date in your exam or else you will not get the marks. And I will advise you to put a date here, and with this date, please give a note below the answer. The note will be, I assume that this transaction took place on that specific date. If you write this note, you will get the full marks. Okay? Next. Number C. Explain one error that could not be identified by preparing a purchases ledger control account. That error is error of commission. Error of commission will not be identified by preparing a purchases ledger control account, because in this error, double entry will be correct in both the accounts. Only the mistake will be made in classification of accounts. So wrong classification of accounts will not be identified if we prepare the purchase ledger control account. Clear? If you have any query regarding this question, please comment in my comment box. I will try my best to explain you. If you like my video, please share with your friends and family, like my Facebook page, subscribe my YouTube channel, and don't forget to press the bell icon so that you can receive notifications about my latest videos. Thanks for watching. Bye bye.